7% increase in revenue combined with controlled operating costs led the JSE Limited, the company that operates the local bourse, to report a 22% increase in net profit after tax to around 253 million rand. We now cross over to the company's floor where the Deputy CEO, Nicky Newton-King, is standing by to delve into the numbers further. Thank you so much, Nicky, for joining us today. Much appreciated. I think that it's fitting that we delve into the interim dividend, which was quite a surprise, many would think, for the market. 210 cents. You've never actually given out an interim dividend before. Let's look at the thinking behind that. And I suppose the big question that everyone's asking is this going to be sustainable down the line? Are we going to see interim dividends occurring from now on?
Because it is a special and not an interim dividend, precisely for the reasons that you're indicating. We want to make sure that when we do declare dividends, it is sustainable. In this particular case, we have gone through our normal review of the capital that we require. We do not have any debt. We look at the amount of capital we need to keep to meet operating expenses. We look at the amount of capital we need to keep to invest in our business, and we look at the amount of capital that we need to keep in order to guarantee the on-market trades that we need to settle. And we came to the conclusion that we did have 200 million rands worth of surplus capital, and that we've now returned that to shareholders.
Well, with regards to dividend policy going forward, and you mentioned that it is in fact a special dividend, what kind of dividend can we expect for the full year, given the fact that the dividends, the special dividend this time round, was in fact the overall dividend last year?
Well, we did declare, as you rightly said, exactly the same dividend last year. We'll come to the end of this year and see what's appropriate, but we do want to be the type of investment that returns regular returns to shareholders, so, you know, provided our business continues to perform in the way that it has to date, you know, I certainly wouldn't want our shareholders to be disappointed.
Yeah. With regards to possible acquisitions going forward, and again I allude to the fact that you mentioned it's a special dividend, does this mean that you could still be on the lookout for acquisitions going forward with that extra cash that you've got?
You know, we try to grow this business organically. We also try to grow this business when there are very good business opportunities, but we certainly aren't the type of management team that takes the view that we have cash must spend. Our industry, on the other hand, is a very fast-changing industry, and in which you have to reinvest in your business regularly, and you can see that from the type of very big tech spend that we have every year. If it is appropriate for us to make acquisitions in future, then that's what we'll do. But we consider these things on a case-by-case basis.
Let's touch on the Africa board. You've got currently 2 listings. There's also been quite a bit of skepticism as to the success of the Africa board. What is the process from here onwards? Is there any thinking behind actually doing away with the Africa board as a whole?
Actually, not at all. To the contrary, we actually have 27 African companies listed on the JSE, 2 on the Africa board, the rest are on the main board. And we believe that Johannesburg and the JSE needs to play a role in intermediating investment opportunities for issuers and investors. Now, the Africa board has attracted 2 companies. Those companies trade extremely well on the Africa board relative to their home exchanges. And we are continually having conversations with good, large African issuers about the benefit of being on their home exchange, but also on the JSE, because we do think that there is a very compelling argument for them to be on the JSE as opposed to, for instance, the London Stock Exchange or Toronto. But certainly they have to be dual listed, would be our proposition, on your home exchange and on the JSE. That said, there are other things that we think could be being done on the continent, and that we are looking at doing. We're working very hard with a number of African exchanges on their governance issues, their legal structures, and now we're also focusing on how to technologically link a number of African exchanges. So I think you should see more rather than less activity from the JSE relative to Africa going forward.
Let's touch on exchange-traded notes, exchange-traded funds, and where we stand right now, because we know on a global level there's been immense interest. What is the scenario looking like in South Africa now, given the fact that some say that South Africa has been far slower in this uptake, but is starting to gain momentum?
I think you're right. We are starting to gain momentum, and I think you're going to see more and more innovation. One of the things that we have done well as a country, and the JSE is certainly trying to play our part in that regard, is to make sure we introduce product that our clients want and need in a very sound regulatory environment. I think, as you know, we are the world's highest rated regulated exchange, above New York, above London, and that means that when you introduce things like exchange-traded notes, exchange-traded funds, and all the other products that we list across our product line, we do that in a very secure, regulated environment. So you're going to see that innovation continue, but you're going to see that continue within a regulated space.
Let's touch on the bond market very briefly. What about ensuring to include the retail investor out there? We know that it is pretty tight at this point in time, and some have been very cognizant of these facts. Do you think that you are going to be on a path to make it far more transparent and accessible?
So the bond market is a very big focus of ours, as you know, ever since we bought the bond exchange. Yeah. We are busy working with the major market participants and the National Treasury and our regulator to try and develop a bond market that has transparency, that has some sort of centralized disclosure. That project is taking far longer than we would have liked, but we are getting to the stage where we are going to have to finalize the model. We've been discussing it for 2 years. That is one part of the exercise. The other part then is how do you encourage retail guys to participate more? And that goes far beyond just bonds. It's about demystification. It's about retail investor education. And we have had, as I think you would be aware, last week, a very successful retail investor showcase here, education showcase. We've got other initiatives through the year. I think that the whole question of getting more retail, direct retail participation is about increasing savings in this country. It is about increasing sophistication of people who have savings and their comfort with trading on our markets.
Very quickly, IPOs, where do we stand right now this year? What are you expecting next year? We know that it's been very slow since the crash.
It's been slow around the world since the crash. We've had 5 this year to date, relative to 6 to date last year. There is a pipeline. We never comment on the depth or the size of companies in that pipeline, but certainly, you know, it's important that we continue to attract issuers. At the same time, you know, a lot of our pipeline is in new product development that is not issuer dependent.